investment decision, also known as capital budget, capital budgeting. Investment decision is also known as capital budgeting. With respect to capital budgeting, the entire topic is full and full based on decision making. Decision making with respect to long term. Short term decision making means that comes under working capital management, whereas capital budgeting is the long term decision making. So, with respect to decision making, both long term as well as short term, both working capital as well as capital budgeting, nothing but investment decision, we should be careful with respect to doing the decision. But with respect to working capital management, decision making with respect to working capital management, since it's a short term, risk factor is less when compared to long term decision making. Long term decision making means risk factor will be high, whereas in short term means risk factor will be less. In case of working capital, fund investment amount, initial investment or fund amount will be less. Whereas in capital budgeting, huge cash outflow involved. That's the reason risk is also high. Then, in case of working capital, investment in working capital, return immediately we are going to enjoy. The benefit we are going to enjoy immediately. Whereas, with respect to capital budgeting, it's a long term, we have to wait for few years to get back the amount we have invested. Benefit out of the investment, we have to wait for some considerable period. Working capital management, since we are getting the benefit immediately, there is no much risk factor. We no need to wait for the longer duration. Therefore, there is no question of time value of money involved. Whereas in investment decision, capital budgeting, we have to wait for the long duration. Future is always uncertain. Therefore, today's money's worth may not equal to tomorrow's money's worth. So, time value of money concept applicable in case of capital budgeting. Now you got the difference between working capital and investment decision, short-term decision and long-term decision. Are you with me? Now,
Sir.
what are all the techniques are there to do the decision? You know, with respect to evaluation of capital structure, which capital structure is best if you want to evaluate, we are having some tools. First preference for, any idea? First preference for market price for MPS. Second preference,
Yes.
earning per share. Whereas third preference,
Return on equity.
return on equity. Understood? So we need some tool. Am I right or not? Similarly, here also, with respect to capital budgeting, we are having some tools. What all the tools are there with respect to capital budgeting decision? Note it down. Capital budgeting. So decision making with respect to long term process. Decision making for the long term. Project evaluation techniques. Project evaluation techniques in capital budgeting. project evaluation techniques in capital budgeting. Project evaluation techniques in capital budgeting. First one, simple payback. The first technique is called simple payback. Second one, payback reciprocal. Third one, ARR. ARR stands for accounting rate of return or annual rate of return or average rate of return. Accounting or annual or average rate of return, ARR. Next, discounted payback. Discounted payback. Net present value. Net present value. Next, profitability index, also called desirability factor. Profitability index, also called desirability factor.
Repeat பண்றீங்களா சார்?
Profitability index, also called desirability factor. Desirability factor. Next, IRR, internal rate of return, IRR. And MIRR. Totally how many techniques?
8, sir.
8. Check பண்ணிக்கும்.
What about capital rationing?
Capital rationing is a tool, another tool, evaluation technique. Okay, இதெல்லாம் ஃபார்முலா பேஸ் பண்ணி இந்த ஃபார்முலா யூஸ் பண்ணி பண்றது தான் கேபிட்டல் ரேஷனிங் கண்ணா. whenever fund inadequate இருந்தா பண்றது கேபிட்டல் ரேஷனிங். ஓகே, ஸோ இப்போ என்னென்ன டூல்ஸ் இருக்கு? 8 டூல்ஸ். சிம்பிள் பேபேக், பேபேக் ரெசிப்ரோக்கல், ஏஆர்ஆர், டிஸ்கவுண்டட் பேபேக், நெட் பிரசன்ட் வேல்யூ, ப்ராஃபிட்டபிலிட்டி இண்டெக்ஸ், internal rate of return, then modified internal rate of return. Okay, these are all the 8 techniques or 8 tools. Note some ideas. First one, simple payback. First technique is called simple payback. It represents time duration required to get back the amount invested. Time duration required to get back amount invested is called simple payback. Mohan Raj, புரியுதா? We are investing money. To get back the invested money, எவ்வளவு duration தேவைப்படுது? That is called simple payback. புரியுதா? போட்ட பணத்தை எடுக்கிறது எவ்வளவு நாள் ஆகும்? That is called simple payback. Formula for simple payback. Simple payback is equal to initial investment divided by CFAT per annum. Initial investment divided by CFAT per annum. அந்த ப்ராஜெக்ட் அந்த மிஷினை வாங்குறதுக்கு எவ்வளோ செலவு ஆகும், இனிஷியலாக எவ்வளோ செலவு பண்ணுறோம், அதான் இனிஷியல் இன்வெஸ்ட்மெண்ட். இன்வெஸ்ட்மெண்ட் தான் இனிஷியல் இன்வெஸ்ட்மெண்ட். CFAT stands for cash flow after tax per annum. Cash flow after tax per annum. CFAT is equal to PAT plus depreciation. Profit after tax plus depreciation is equal to CFAT.
Sir?
CFAT is equal to profit after tax plus depreciation. Pridashman?
One doubt, sir.
Yes.
Sir, what if the project involves different cash flows?
Different
cash flows.
Uneven cash flow இல்லையா? அது அடுத்த டெக்னிக்னா. சிம்பிள் பேபேக்ல ரெண்டு டெக்னிக் இருக்கு. ஒன் இஸ் யூனிஃபார்ம் கேஷ் ஃப்ளோ, another one is uneven cash flow. ஒன் பை ஒன்னா டிஸ்கஸ் பண்ணுவோம். சரியா? சரி சொல்ல மாட்டியா? சரி. So formula for simple payback என்ன? Initial investment divided by CFAT per annum. Okay, CFAT. Okay, yes. So we'll do one question. Chatல question இருக்கும் பாருங்க. Question படிக்கிறீங்களா அந்த question?
Yes, sir. A project costs rupees 25 lakhs and yields annually a profit of rupees 5 lakhs after depreciation. In brackets, straight line depreciation, but before tax of 50%. Life of the asset is 10 years. Find out the payback.
Now, note down formula for simple payback. Initial investment divided by CFAT per annum. Initial investment divided by CFAT per annum. Initial எவ்வளவு இருக்குன்னா
25 lakhs.
25 lakhs divided by CFAT. Working note for CFAT. They said project yields a profit of 5 lakhs after depreciation, straight line method. Am I right? But before tax. That is called profit before tax is equal to 5 lakhs. Am I right? 5 lakhs represent the profit before tax. Less tax. How much percent tax? 50% tax. Am I right? Balance equal to profit after tax. Balance 2 lakhs, 50,000 is the profit after tax. Are you with me? Add depreciation. How much the depreciation? Value of asset 25 lakhs. Salvage value எதுவும் இல்லை. Whereas life of the asset 10 years. Therefore, 25 lakhs divided by 10 years is equal to 2,50,000. Therefore, CFAT is equal to how much?
5 lakhs.
CFAT is equal to 5 lakhs. Got it, my dears?
Yes, sir.
Now, simple payback. What is the answer for the simple payback?
5 years, sir.
5 years.
years.
Answer for the simple payback is 5 years. Good. Ashwin Purida, any doubt?
Yes, sir.
Mohan Raj புரிஞ்சுதுங்களா?
Yes, sir.
Good. Next. Initial investment, note it down. Initial investment 12 lakhs. CFAT 3 lakhs per annum. Life 8 years. Compute simple payback. What is the answer?
So CFAT also?
CFAT 3 lakhs per annum. Initial investment 12 lakhs, CFAT 3 lakhs, life 8 years, compute simple payback.
Four years.
4 years. Nothing but 12 lakhs divided by 3 lakhs. Got it?
Yes, sir.
Next question. Rahman Khan, read the question. Hema Bindu Puridama. Rahman Khan, read. Rahman. Jyotika, படிங்க. Rahman இங்கே போயிட்டு.
Initial investment is equal to 2.5 lakhs. Project life 6 years. Cash flow per annum, year 1 18,000, year 2 27,000, year 3 86,000, year 4 98,000, year 5 68,000. Compute payback period.
Note பண்ணிக்கோ. Computation of simple payback segregated into 2 parts. Computation of simple payback segregate into 2 parts. One is uniform cash flow. Another one is uneven cash flow. Uniform cash flow and uneven cash flow. Under uniform cash flow, formula based method, tabular method, uneven cash flow, tabular method. Are you with me?
Yes, sir.
Ashwin, this question uniform cash flow or uneven cash flow?
Uneven cash flows.
Year after year, cash flow changes. Therefore, we have to solve it by a formula based method or tabular method.
Tabular method.
Tabular method. That is what was the first question, am I right or not? First doubt. Clear?
Yes, yes, sir.
Now, note பண்ணிக்கோ. First column year, under year 1, 2, 3, 4, 5 info available.
So the same continuation அதே டேப்ல காலம்லயே வா சார்?
என்னப்பா?
இது சேம் அதே டேப்ல காலம்லயே continuation.
இல்ல முன்னாடி சொன்ன தியரி segregated to two parts. இப்போ நம்ம ஆன்சர் பார்ட் போறோம். ஓகே.
Right, okay.
Now first column year fresh ஆரம்பிக்கும். First column year 1, 2, 3, 4, 5. Second column CFAT. Year 1 CFAT available 18,000. Year 2 27,000. Year 3 86,000. Year 4 98,000. And year 5 68,000 ஆகனா கொஸ்டின் உள்ளதை காப்பி பண்றோம். Next column cumulative CFAT. What about the cumulative CFAT? 18,000. Second column 18,000 plus 27,000 is equal to
45,000.
45,000. Year 3 45,000 plus 86,000 is equal to
1,31,000.
131. Then fourth year add 98,000.
29,000.
29,000. Year 5
2,97,000.
2,97,000. Got it? Mohan Raj Purida, Ashwin Purida Gana.
Yes, sir.
Table got முடிஞ்சது. Next concept note பண்ணிக்கோ கரெக்ட்டா. Initial investment is equal to how much Kanna? 2,10,000. Am I right?
10,000.
Investment is 2,10,000. When we are going to get back 2,10,000 the table la? First year 18,000, second year 45,000 வந்தது, third year 131, fourth year 229. Am I right? அப்ப எந்த இயர்ல நமக்கு வருது? Invest பண்ண 2,10,000. Which year you are getting back?
Between third and fourth year. Between 3 and 4.
Yeah, between 3 and 4. 3 years plus number of months. Am I right or not? 3 வருஷத்துக்கு அப்புறம் இல்லையா? Therefore, up to 3 years, how much we got it? 1,31,000 we got it.
31,000.
இப்போ பேலன்ஸ் எவ்வளோ இருக்கு? அவுட் ஆஃப் 2,10,000 3 இயர்ஸ்ல 1,31,000 வாங்கிட்டோம், ரெக்கவர் பண்ணிட்டோம். பேலன்ஸ் how much we need still? We have to recover still
79,000.
79,000 still we have to recover. That 79,000 you have to recover in which period? During the period of
6 years.
During the period of 5th year. Am I right or not? Therefore, listen here. 4th year or 5th year? 4th year. Am I right? 4th year. Therefore, our simple payback is equal to 3 years plus number of months. Am I right or not? மோகன் புரியுதாப்பா? 3 வருஷமும் சில மாதங்கள் தான் சிம்பிள் பேபேக். 3 வருஷத்துக்கு அப்புறம் தான் எடுக்கிறோம். But number of months we have to compute. In fourth year, for 12 months period, how much we got it? எவ்வளவு ரெக்கவர் பண்ணிக்கோ 12 monthsல? 98,000 ரெக்கவர் பண்றோம். Therefore, we need only balance 79,000. To recover 79,000, how many months we need? To recover 79,000, how many months we need? 98,000க்கு 12 மாசம் தேவைப்படுதுன்னா 79,000 எவ்வளவு தேவைப்படுது?
9.67 months.
9.67 ஆகனா குட் கண்ணா. 9.67 months. Therefore, simple payback is equal to 3 years plus 9.67 months. Good. Move on to Ashwin. எல்லாருக்கும் புரிஞ்சுதா?
Yes, sir.
రెడ్డి గారికి అర్థమైందా?
Yes, sir. Completed.
Very good. 3 years plus 9.67 months. So, with respect to simple payback, whatever I invested, when I am going to get back is called simple payback. I think what time duration required to get back the amount invested is called simple payback. Clear? For the two, one is in case of uniform cash flow, you have to solve it by formula based approach. In case of uneven cash flow, we have to solve it by way of tabular method. So all of you understood both tabular method as well as formula based method. புரிஞ்சது எல்லாருக்கும்?
Yes, sir.
Good. Next. Initial investment 20,000. Initial investment 20,000. CFAT per annum 4,000. Initial investment 20,000. CFAT 4,000. Find payback reciprocal. Find payback reciprocal. Note it down. Formula for payback reciprocal is what is called reciprocal? Inverse. I think but reciprocal of simple payback. Inverse of simple payback only. Therefore, formula for payback reciprocal is yes. CFAT per annum divided by initial investment into 100 because you have to express in terms of percentage. Okay, Hemabindu. CFAT divided by initial investment into 100. CFAT 4,000 divided by initial investment 20,000 into 100 is equal to what is the answer for payback reciprocal?
Sir, excuse me. Sir, excuse me, sir.
Yes, Kanashwin.
Sir, can you please repeat, sir? Suddenly we got some network fluctuations.
Okay.
So I could not know.
Yeah, I will repeat. Payback reciprocal. Simple payback. It represents reciprocal of simple payback. And it should be expressed in percentage. It should be expressed in percentage. Formula for payback reciprocal. CFAT per annum divided by initial investment into 100. Are you with me?
Sir.
So find out 4,000 divided by
20%.
20% agana. All of you got 20%. Got 20%, my dears?
Yes, sir.
Good. Am I visible? Audible?
Sir.
Break out the next. Go to previous problem. Report only on. Initial investment 2,10,000. Life 6 years. Year 1 to year 5, 18,000, 27,000, 88,000, 98,000, 68,000. Year find payback reciprocal. It's a even cash flow or uneven cash flow? Uneven cash flow. Then find payback reciprocal. How to compute? CF average CFAT, how to compute? Am I right? What about the average CFAT? 18,000 plus 27,000 plus 86,000 plus 98,000 plus 68,000 is equal to average. How much average CFAT?
So 59,400.
59,400 divided by initial investment 2,10,000 into 100. So
8.28.
how much percentage?
8.28.
28 adana. 28.28%. Got 28.28%.
Got, sir.
Good. So simple payback in case of uniform cash flow and uneven cash flow we have discussed. Then we have discussed about payback reciprocal in case of uniform as well as uneven cash flow. Are you manageable, Kanna? Sometimes the small questions all you can be the question expert in MCQs also. MCQ chance.
Yes, sir.
Next. ARR. It stands for accounting rate of return or average rate of return or annual rate of return. Accounting or average or annual rate of return. Okay. Formula for it should be expressed in terms of percentage. It should be expressed in terms of percentage. It should be expressed in terms of percentage. Next. ARR is equal to average profit after tax per annum divided by average profit after tax per annum divided by net initial investment into 100. Average profit after tax per annum divided by net initial investment into 100. Net initial investment represent initial investment minus salvage value. Net initial investment represent initial investment minus salvage value. Over. பண்ணியாச்சா?
So one doubts.
சொல்லுப்பா.
We should also add the working capital to it.
என்னமா?
Audible?
விட்டுட்டு கேக்குது, பரவாயில்ல சொல்லுங்க.
Sir, we should add the working capital to it also. Working capital.
Working capital?
Sir, we should add working capital to the net initial investment also.
Okay. With respect to with respect
initial
to
investment minus salvage value.
Listen here, my dears. Yeah, I understood your doubt. With respect to ARR, 7 different formulas are there. 7 different formula. Either you can compute ARR annual basis. What is annual basis? What is the formula for ARR? Profit after tax only. Every year profit after tax. Every year beginning of the year, how much the investment? அதை வச்சு ஒன்று போட்டு thereafter overall average போடுறது. Or another formula is that opening investment, closing investment divided by 2 divided by numerator average profit after tax எடுக்கலாம். இது மாதிரி ஒர்க்கிங் கேபிட்டல் அட்ஜஸ்ட் பண்ணி ஒன்று இருக்கிறது ஒன்று இருக்கு. இது மாதிரி 7 different formulas are there. ஏதாவது ஒரு ஃபார்முலா அப்ளை பண்ணா போதும். Formula will give different answer only. Same answer வராது. Any one of the formula you can apply பண்ணலாம். புரியுதா அஸ்வின்? Hello?
Sir, I understood.
Different methods of computation of ARR institute material கொடுத்திருப்பான். ஒரு 4 மெத்தட் கொடுத்திருப்பாங்க. வேணா ட்ரை பண்ணி பாருங்க. So different way how to solve the problem. Now we are applying which formula? ARR is equal to average profit after tax divided by net initial investment. Okay. Net initial investment represents initial investment minus salvage value. Now, yes, Ashwin, kindly read the question, Kana. ஜோதிகா படிக்கிறீங்களா?
Yes, sir.
Sir, am I audible, sir? Sir, am I audible?
இல்ல, இப்போ audible Kana, yes.
Sir, my network is slightly down, sir.
Okay. Jyotika will help us. Okay.
A project requiring an investment of rupees 10 lakhs yields profit after tax and depreciation as follows. Profit after tax and depreciation for year 1 50,000, year 2 75,000, year 3 1,25,000, year 4 1,30,000, year 5 80,000. Total is 4,60,000. At the end of 5 years, the plant and machinery of the project can be sold for 80,000. Calculate the accounting or average rate of return.
Note பண்ணிக்கும். ARR is equal to average profit after tax per annum divided by net initial investment into 100. Average profit and profit after tax given in this question 50,000 plus 75,000 plus 1,25,000 plus 1,30,000 plus 80,000 divided by life 5 years. What is the answer, Kanna?
10%.
10%. Good. 10%. Right. Good. Ready, Gauru. Right. Hema Bindu, Abhinav, Khan, Abdul Kabal Khan. Got 10%, my dears? Good. So, with this, I'm concluding today's session. So, what and all we learned in capital budgeting? Simple payback in the uniform cash flow, uneven cash flow. Then, discounted pay. Next one is what? Payback reciprocal in case of uniform cash flow, uneven cash flow, ARR. So all the three techniques are without considering time value of money. All the three techniques are one without considering time value of money. Tomorrow we can discuss with considering time value of money how to solve the problem. Understood, my dears?
Yes, sir.
Good. Enjoy your weekend. Bye-bye.
Bye, sir. Thank you, sir.
Yes. Bye-bye.
Sure.
Thank you, my dears.
Thank you, sir.
Thank you.
Thank you, sir.